Hello again and welcome to Money Matters. Choosing the best stocks to put into your portfolio has become a task filled with risk these days. Events in Taiwan and Ukraine have shown us that solid businesses delivering good regular returns are the best choices to get through these uncertain times. This week, stock pickers from two companies join us to give us their choices as they go head to head.
This week, a tag team from Alex Wong Asset Management goes up against Dickie Wong from Kingston Financial Group. Dickie says the increasing tension between China and the U.S. along with geopolitical instability elsewhere has created a lot of stock market volatility in Hong Kong and the rest of the world. He says, mix in the expected interest rate increases to continue at the Federal Reserve and you have a pretty uncertain mix of factors going into your investment choices. And so Dickie's first stock pick strikes one as risky amid all the other risks out there. Tech stalwart Alibaba, stock code 9988.
You may ask me why you pick Alibaba amid concern about the instability, regulatory risk, and so on. Well, obviously, I think, first of all, this stock is trading at its relatively low P multiple. And second of all, they have already announced a big move that they will plan to have their listing in Hong Kong, not secondary listing anymore, but dual primary listing.
He says a dual primary listed company of Alibaba's market cap size will eventually be included into the Stock Connect scheme with China. The Connect is the arrangement between Shanghai and Hong Kong where brokers in both markets can trade the other market's company shares using local brokers and clearing systems. Only the biggest, most liquid stocks can be traded in the Connect system. The inclusion of Alibaba into the Connect is expected to attract lots of interest from investors in China.
Obviously, Alibaba may eventually will be delisted. No, I don't know when, but maybe there is some kind of risk will be have to delisted in the US. This is not a very big threat anymore because, as we all know, trading volume, yes, in US much higher than in Hong Kong, but as long as they will have the dual primary listing in Hong Kong, HFCAA, the addition is not a very big threat anymore.
Dickie continues to target the stock as a future winner given its size and market presence on the mainland.
The share price, yes, recently, not only Alibaba, but also Tencent, they're facing increasing regulatory risk from mainland China. But obviously, I think its share price already reflected that at this negative sentiment.
Dickie sets a target price of $100 and a stop loss at 83. Dickie's second stock pick enjoys increased traction in the electric vehicle market. Geely Auto, stock code 175. He says investors have to steel themselves against the volatile share price performance of China's EV makers and focus on the fact they're making cars for a market that wants to buy greener automotive options.
I think Geely is in the position that, first of all, in terms of PE multiple, Geely is trading at a much lower P multiple compared to BYD and even those like EV automakers like Li Auto and XPeng. And second of all, they recently announced a few more new EV model to the Seeker brand.
In the longer term, Dickie thinks Geely will catch up to its EV rivals, reaching 1,000 cars sold every month. Geely gets help from Beijing policies that encourage buyers to go electric, bringing the country's carbon emissions down as promised. It's a risk because those subsidies could easily be ended.
Some of their earnings may rely on the government's policy. But in the longer term, I think the business and when we talk about the Chinese auto sector is still sustainable, and actually they can have a better earnings growth in the longer term.
Our next stock picker is part of a duo that decided two heads were better than one. Mila Yun of Alex Wong Asset Management. Mila's stock is Chinese mobile telephone provider China Mobile, stock code 941. Mila says the company acts like a safety net in these volatile investment times. Counters with low beta, high dividends.
Its dividend yields over 8% right now. And the good thing is China Mobile had been blacklisted by the US before, because which is a good thing, because most of the foreign speculators were gone. The volatility turns even lower, but is more friendly to most of the normal individual investors. Besides, China Mobile is a state-owned enterprise. You don't have to worry about any strong actions from China's regulator.
The dividend is expected to improve in the next 3 years as the company plans to boost its payout ratio to 70%. Its aggressive investments in data centers, cloud services, and mobile 5G industrial applications means its share price will improve first, once the uncertainty dies down. The chief risk China Mobile faces is from the currency market and a rising US dollar.
Most of the currency of other countries like Europe, China, Japan, the currency is relatively weak. So that may be one of the risks.
Mila sets a target price of $60 and a stop loss of $43. The other half of the tag team is Alex Wong, who chooses drinking water and beverage company Nongfu Spring, stock code 9633. Alex says China's largest packaged water supplier and beverage tea maker would benefit from an inflationary economy as its costs would stay the same, but prices at the retail end could rise. Investors have flocked to its shares as it is a solid defensive play in uncertain times.
The stock has strongly outperformed the market during July. So I think this probably would still be the safe haven pick in Hong Kong. So probably would continue to outperform the market.
The $200 billion blue chip company enjoys a strong market position in China and faces few market risks.
Not much risk in its business because this is a basic necessity product. Probably you can say people switch to home water. So that is the only risk, I think. But I think that this is a very minimal risk.
Alex sets a target price of $49 and a stop loss of $42. We'll review the stock picks in a month to see who comes back to go head-to-head. Cathay Pacific shares closed higher after announcing its first-half net loss narrowed to $5.3 billion. The company says Hong Kong has fallen far behind other international aviation hubs, as travel restrictions are not yet completely eased. The government has shortened quarantine periods to minimize hotel stays, but Cathay has called for a clear roadmap to remove all restrictions. The government has launched a new batch of silver bonds with the highest ever guaranteed interest rate of 4%. The seventh batch of silver bond will be offered at $10,000 per unit with a maturity of 3 years. Bondholders will be paid interest once every 6 months at a rate linked to inflation in Hong Kong, subject to a minimum rate of 4%. That's higher than the minimum rate of 3.5% of the sixth batch issued in August last year. The target issuance size for this batch of silver bond is $35 billion, but the government may increase the size to a maximum of $45 billion. Starting August 23rd, residents who turn 60 in or before 2023 have until September 2nd to subscribe. Shares of Boeing gained after federal regulators said they're satisfied with changes Boeing has made in the production of its 787 Dreamliner passenger jet. That clears the way for the company to resume deliveries. American Airlines said it expects to get its first new 787 in more than 15 months. Production of the new two-aisle jet has been marred by problems. They include gaps between panels of the carbon composite skin and the use of unapproved titanium parts from a supplier in Italy. About 120 have been parked while Boeing tried to fix the production process. The regulator said it will inspect each plane before it is approved for delivery.
Coming up on Money Matters, how the secondhand luxury goods market has taken off in the Greater Bay Area. Stay with us. Welcome back to Money Matters. Chinese consumers used to flock to Hong Kong to purchase expensive luxury brands they knew were genuine. The SAR's reputation for selling only the real thing reached nearly exalted status compared to the mainland's minefield of cheap knockoffs. But COVID has kept Chinese buyers away from the local high streets. Yet the hunger for luxury brands has not disappeared. Alice Kahn reports on the growth of the secondhand luxury market in the Greater Bay Area.
Ten years ago, Terry opened a shop selling trendy clothes and art. Some of the merchandise was secondhand. Terry says that younger customers usually want to buy the latest fashions and trends. Many buy on impulse, spending money on things they don't really need. He noticed some customers resold these items online. It had become a trend. A light bulb went off in his head. Why not resell these same things himself? And so he opened a second-hand shop. Currently, 50% of his business revenue comes from selling second-hand merchandise.
Many people exchanged items online. Some even exchanged used products with overseas consumers. Then I started my own second-hand business. The growth of this market has been very rapid. In the past, people bought second-hand items that were discontinued products, or some people had a limited budget, so they bought their favorite items from the second-hand market. At first, there weren't many of these people buying. Now there are lots of people buying second-hand stuff.
Terry sells trendy secondhand clothing, but he also loves fast cars and decided to go into the used car business.
I have loved cars since I was young. I liked learning about cars. Everything about them was interesting. At first, I just bought cars based on their style. I bought many automobiles. But then I studied their history, the market supply and demand, quality and condition. I had already bought many vehicles, but then I started buying only very high-quality models. It wasn't easy purchasing these cars.
Terry was 18 when he bought his first car. Since then, he's owned many different models over the years. Terry says he buys new cars for daily use and then collects older cars. Many other people are the same.
For race cars and limited edition cars, I go for older years because they're hard to find and their value will appreciate more. In recent years, the price of the rare vehicles has shot up a lot. Now I go for diesel cars, high fuel tank capacity cars. The reason is that electric cars have become mainstream. Higher fuel capacity limited edition cars are now collectibles.
Sales of luxury automobiles is an important segment in the second-hand car market. An analyst says younger, savvier buyers are interested in second-hand luxury products, as they realize these items can fetch more money on resale.
First, they can afford these cars. Second, they received a family education which was different from that of the ordinary people. They learned how to make money when they were young. In terms of wealth management, they consider second-hand luxury items as a segment of wealth management. For example, rich people and the second generation of the rich families put a lot of investment in this segment. They can afford the prices.
A used car show in Shenzhen. 10,000 square meters of space filled with hundreds of second-hand luxury cars of all shapes and sizes. Cheng Xiangfa has been selling second-hand automobiles for over 2 decades. He says the growth of the used car market has grown rapidly. He says customers are spoiled for choice.
When I was 20-something, 27, 28 years old, I wish I could own a car as a 30-year birthday present to myself. But when I was 30-something, I lost my interest. I didn't buy one, never bought this BMW.
Like Terry, Chen also liked racy luxury cars when he was young. In time, he turned his interests into a business.
Why the second-hand car business? It's very practical. The setup and operating costs are low. The cost for operating a new car dealership is higher. If I sold new Hondas in Guangzhou, I would need over 20 million renminbi to open a dealership. I was an entrepreneur. I wanted to get things going quickly. I bought one after another. I sold 10 and then grew to 100. Now I sell 20,000 vehicles a year.
Chen says at the time, the second-hand car market wasn't mature in Guangzhou. 30 years ago, Chen got market information from Hong Kong. Over the years, Shenzhen became the most competitive market in the country. But he still thinks the market infrastructure is not as good as the ones in overseas countries.
Currently, demand is stronger than supply in the second-hand market. It's a seller's market. Selling prices are still high. Used car prices in Hong Kong and overseas are cheaper. In China, the car insurance premium payments increase just a few years after you buy. The maintenance fee is also very high. But the value of second-hand cars here is higher, so the prices are not very low. In foreign countries, a 6-year-old car must be retired, but not in China. The resale value of automobile is very good. There are many used car buyers, and that's why prices don't go down.
China's living standards have grown in the past 40 years, since the country embraced an open, reformed economy. More people can afford luxury goods. Brand new luxury cars are still sought after, but many consumers go for used cars. Some purchase rare models as an alternative investment. The analyst says another reason for rapid development of this market is the widespread use of the internet and smartphones.
I don't know whether everyone realizes that as the internet developed so fast recently, especially with 4G and 5G, consumers can get used car information instantly, and they can share the information easily. This is the current trend.
After a pandemic-induced delay, a new and permanent Bruce Lee exhibition has opened at the Wing Luk Museum of the Asian Pacific American Experience in Seattle, with support of the Bruce Lee Foundation. His daughter Shannon Lee wrote a book about her father's teachings that was published in 2020. She says the exhibit was an immersive extension of the in-depth research exploring her father's life as a philosopher.
I didn't feel like everybody was getting the full picture of the human being. And it's really part of my mission for people to understand actually what level of philosopher he really was. I mean, I know we know he had some awesome quotes, but it goes so much deeper than that. And, you know, he's so well read. He's so well studied. He's so well written. For a man who died at the age of 32, his work ethic and work product and process is really profoundly deep, and in fact is the foundation for what he was able to accomplish on the martial arts side, on the film side, on the cultural side of you know, becoming this global icon.
She still remembers little glimpses of life with her father before he died when she was 4. Her father's book collection spanning martial arts theory, filmmaking, and philosophy will now remain at the museum permanently. Fans say it is a must-see attraction.
It's a different perspective, you know what I mean? I did, when I was 12 and when I was in 6th grade, I did lifelong research on Bruce Lee for one of my projects, but I'm always learning something new. I've never seen this side of him.
Seattle is rich with the legacy of Bruce Lee, the University of Washington, where he studied philosophy, and it's where he caught the acting bug. Daughter Shannon says the exhibit illustrates the human side of her father that she will remember.
The unlimited part of my memory is that I have a real sense of him energetically, the way he made me feel, the way I felt in his presence, his energy, his love, his adoration, a sense of safety, being with him. And those are things, because I call that unlimited, because those are things I got to take with me into my adulthood.
That's the show. Thanks for watching. Join us next week when we take a look at Hong Kong's improving job market. See you then. Good night.